So I still actually feel very good about gold. I think it's likely to end this year higher. But if the profit taking starts triggering stops and it becomes a bit of a waterfall event, I can't promise you that won't happen. I can only say that if it does happen, then I'll be, going over my shopping list and checking it twice,
You're watching Silver News Daily. Subscribe for more.
I am very much right now, I'm in powder accumulation mode. If I saw a really great speculation that I'd overlooked before, a compelling value proposition now in the commodities that I favor, I can't say I wouldn't buy anything today. But today, with the market volatility we're seeing, my general inclination right now is actually build cash. I think, I would love to see that all of my favorite commodities just go straight up from here, Elijah. Gold, silver, copper, uranium, the bottom's in, and woo, they're just going to go great. But for what it's worth, my wolf whiskers are twitching. I don't know what's going to happen. But if we get a big liquidity event and a big buying opportunity, I will be glad to have cash ready to deploy.
Silver is standing on the edge of an eruption so massive, so inevitable, that when it happens, the financial world won't know what hit it. Inflation is running wild, stripping away the value of every dollar, every euro, every yen, while central banks scramble to hoard gold and silver in an act of quiet desperation. But that's just the beginning. Global markets are teetering on the brink, geopolitical conflicts are shaking the very foundation of economies, and investors are waking up to one undeniable truth. Fiat currencies are crumbling, and real assets are the only safe harbor left. And yet, despite all of this, silver remains shockingly undervalued. But not for long. A supply crisis is looming, industrial demand is accelerating at a pace never seen before, and the suppression that's kept silver prices artificially low for years is cracking under pressure. The signs are all around us, so why is almost nobody paying attention? This isn't just another bull run. This is a once-in-a-lifetime reset, where silver isn't just expected to rise. It's primed for an explosive breakout that could shatter expectations. The question is, will you be ready when it happens? Because by the time the headlines catch on, it'll already be too late. Stay with me, because by the end of this, you'll see exactly why silver's move is not just possible, it's unstoppable.
And, not huge, but a significant turn. At the same time, Bitcoin's gone into reverse in a big way. And this isn't schadenfreude here. I'm not trying to say, oh, well, I feel good because Bitcoin's doing even worse. But, it's an interesting coincidence, let's say. Obviously not. So as a market observer, I'm asking myself, what does this mean? Does this mean anything? There's been volatility in the broader indices. As you and I record, then we're seeing some grain on Wall Street, but it's been a tough week. So my wolf whiskers are twitching here. It's the market, has been volatile since Trump was elected. It's been very volatile this week. We might be at something of a tipping point. It's not a prediction. I said might, but it's interesting. We got, with gold specifically, we got within kissing distance of 3,000, a big round number like that. It could be the sort of thing that ignites a flavor of the day off to the races, some new high because everybody gets all excited, or it could trigger profit selling, which might be exactly what we're seeing right now. And I can't tell you which it is. Nobody could. We're just going to have to watch this. That aside, that's the near term. Gold has displayed remarkable strength in the face of what would normally be tremendous headwinds. Higher for longer coming from the Fed, higher dollar. Supposedly, the inflation story has been, problematic for gold in the last couple of years, though that has changed. So there are a number of things that, should have whacked gold down recently, and they haven't. And I don't think it's just a central bank buying that's enough to explain all that. So I still actually feel very good about gold. I think it's likely to end this year higher. But if the profit taking starts triggering stops and it becomes a bit of a waterfall event, I can't promise you that won't happen. I can only say that if it does happen, then I'll be, going over my shopping list and checking it twice, looking for those opportunities.
Inflation isn't just rising, it's rampaging through the global economy like a wildfire, torching the value of savings and wages in its path. Central banks, after years of reckless money printing, are now trapped. They can't raise interest rates high enough to stop inflation without triggering a full-scale economic collapse. And as a result, fiat currencies are spiraling into a crisis of confidence. Historically, when inflation gets out of control, investors flee to hard assets. Gold is the traditional safe haven, but silver? Silver is the dark horse, the asset that moves later but surges harder. We've seen this time and time again. In the inflation-driven bull runs of the 1970s, gold's gains were impressive, but silver's were historic. Between 1976 and 1980, silver exploded from under $5 an ounce to nearly 50, a 1,000% increase. And right now, we're standing at the doorstep of a scenario even more extreme. But here's the key difference. Today's inflation isn't just about loose monetary policy. It's systemic. It's being driven by supply chain breakdowns, energy shortages, and global instability, making it far harder to control than in past decades. Even if central banks attempt to tame it, the damage has already been done. The purchasing power of paper money is deteriorating fast, and investors are waking up to the fact that only physical assets can provide real security. Yet silver remains overlooked, stuck at a fraction of its inflation-adjusted highs. This disconnect won't last. As inflation continues to eat away at fiat currencies, demand for silver as a wealth preservation tool is set to explode. And once the floodgates open, history tells us silver doesn't just catch up. It overcompensates with a velocity that leaves latecomers stunned. But inflation is only one piece of the puzzle. The second major force driving silver's breakout is even more volatile: global instability. Because when the world is on fire, safe haven assets don't just rise, they skyrocket.
Well, so the expectation thing is really interesting. And if you look at these polls, it's been really since the election. Like the ones I forget, whether it's Conference Board or University of Michigan or one of these guys, they ask the people for their political affiliation. And the inflation it's funny. I mean, it's sad, but it's funny. And it's so human, right? The Republicans' inflation expectations are like zero. Trump is going to, there's no inflation under Trump. And the Democrats think it's going to be 6% or 7%. And you average that out, and it's like 3%. I mean, and it's the opposite. Like, you asked them about growth. Well, the Republicans think there's going to be all this growth, and the Democrats think we're going to have stagflation or stagnation because it's Trump, right? So clearly, there's bias on both sides, right? So these expectations and what's going on, it's funny, but it's noise, right? We can't really rely on these numbers. What we can say, though, is that Doge has, I have to say, I was wrong, dear audience. I was wrong. I didn't think that Doge would really make any material change at all. I thought we'd see the Grace Commission on steroids, a lot of noise and thunder. But ultimately, what power would they have? They make recommendations, and in Congress, as always, does nothing. But in fact, Trump gave them power. He gave them through executive branch direct power, at least on the parts of the government where the executive can, apply its authority. They've started. They haven't waited for the committee hearings. Back in the day, they'd still be picking office furniture for what what Doge is going to do, and making sure they have the wallpaper the right color to match the Doge logo and all this stuff. We're only a couple of weeks into this, so the fact that they've actually cut anything, and remember, in Washington, a cut is a decrease in the increase in the budget. If you propose a 10% increase in the budget and they slash it to 5%, this is seen as a cut, whereas, it's actually an increase. And so for Doge to actually cut anything at all, and people are like, oh, it's just a few $1 billion. It's nothing. It's a drop in a bucket. Well, pardon me. That is more than anybody's ever done before. Like, to me, this is my metaphor for this is if you have a dog.
The world is unraveling and silver is about to take center stage. We're no longer dealing with isolated economic troubles. This is a full-scale global meltdown. Wars are raging, supply chains are breaking, and governments are struggling to maintain control. The trust that once held the financial system together is evaporating, and when that happens, investors don't just look for safety, they panic. In times of global chaos, money flees to assets that have stood the test of time. Historically, gold has been the go-to, But silver is the underdog that outperforms when things get extreme. Think back to the financial crisis of 2008. As the system crumbled, silver was trading under 10 an ounce. But within just 3 years, as the world scrambled for real assets, it surged to nearly 50, a 400% gain in the wake of turmoil. And that was just from a banking crisis. What we're facing today is much bigger. The conflict in Ukraine, rising tensions in the South China Sea, the collapse of entire economies. These aren't isolated events. They're symptoms of a much larger breakdown in global stability, and every single one of them fuels the same outcome. Governments printing more money, supply disruptions pushing prices higher, and investors scrambling to find anything that isn't tied to a failing system. This isn't speculation. Central banks themselves are already moving. They're stockpiling gold at the fastest pace in decades, signaling a growing distrust in fiat currencies. But here's the thing. Silver plays a crucial role alongside gold. It's not just a monetary metal, it's an industrial powerhouse. And as the world descends further into crisis, the competition for silver's limited supply is set to explode. We're already seeing the signs. Silver inventories at the LBMA and COMEX are plummeting, premiums on physical silver are skyrocketing, and retail investors are waking up. But the biggest buyers of all? The central banks. And that's what we need to talk about next. Because when the institutions that create fiat currency start hoarding real money, you know something massive is coming.
Now on a micro level, like this sell-off in Bitcoin and crypto land writ large, but in Bitcoin in particular, that's a huge drawdown. We're almost back to November levels. We're almost back to the election levels. It was under 79,000 this morning. It was 78 and change when I saw this morning. I mean, that has, the people who chased it and people who said, oh, it's 100,000, it's going to straight to 1 million, right? Those people are going to be deeply underwater. Some of them are going to be bailing. And where do you go? If you've got a margin call or something, right? That's when you dip into a safe haven. So in the same way, as you're rightly saying, if you have a big market waterfall event, a liquidity event, you sell what you can get a bid. So this could be happening right now. We could see some sales in gold right now because people need the money to pay off their margin clerks on their Bitcoin, options or calls. It may not seem fair or right or whatever, but remember, most market participants, they're not stackers like you and I and our brothers and sisters out there. They're mainstream, commodities traders, COMEX traders, right? And they're just trying to make a buck here and there on the trades. So it makes sense. And the thing about the market crash thesis, though, and by the way, we have a free market crash survival kit on the website. If you go to the free report section of our website, if you don't mind me tooting my horn on that. The thing about this is gold bugs are so skeptical of the mainstream system. I can't recall a year when there wasn't one or two or a chorus of gold bugs calling for an imminent market crash. Now, it might be true this year that we might have gotten to the point where, the ridiculousness of it all just comes undone. The Magnificent Seven go into reverse in a big way. And then people realize that, the not so great 493 are really in trouble, right? And this could be it. We could be on the verge of a major waterfall event in equities writ large, markets writ large, but we might not be. We could actually see that very sign of trouble. The Fed has trained people, the Fed has trained mainstream investors. Oh, trouble is good. Bad news is good news, right? So this very thing that might tip the markets over the edge could be the thing that has everybody saying, oh, the Fed's going to come to the rescue. So let's buy. I'm not sure where you want to go with that, Elijah, but I guess what I want to say is yes, there is a non-zero chance that we could see one of these tipping points. And if gold gets whacked because other people get exposed on other investments, that's a buying opportunity. But don't bet the farm on that. We could see the opposite. I mean, it made no sense for markets to go nuts in 2021, but they did.
For decades, central banks have dismissed silver, focusing their hoarding efforts on gold. But something has changed. Behind closed doors, the institutions that print our money, the very entities that once told the public precious metals were relics of the past, are now buying them at a record pace. And they aren't just accumulating quietly, they're accelerating their purchases like they know something the rest of the world doesn't. In 2022, central banks bought more gold than at any point in recorded history, shattering a 55-year record. And while silver isn't officially tracked in central bank reserves like gold, there's mounting evidence that institutional buyers are scooping up physical silver through proxies. Boy, Sika correct case, draining inventories at an alarming rate. Here's why this is so critical. Central banks don't buy gold and silver for speculation. They buy it when they know the financial system is in deep trouble. When trust in fiat money collapses, these institutions shift their reserves into hard assets to protect themselves from the very chaos they helped create. And that's exactly what we're seeing now. But silver isn't just being hoarded, it's being consumed. Unlike gold, which mostly sits in vaults, silver has real-world industrial demand that eats away at available supply. Every ounce pulled from storage isn't just a hedge against inflation. It's a metal that gets used up in critical industries. This means that while central banks and institutions quietly accumulate, the available supply for everyone else is shrinking fast. We've seen this play out before. When central banks started aggressively accumulating gold in the early 2000s, the price went from $300 to over $2,000 an ounce within a decade. But here's the difference. Silver is far more volatile. When it moves fast, and the conditions right now are setting the stage for a run like we've never seen before. And this leads us to the next critical piece of the puzzle, the silver supply crisis. Because while demand is ramping up at a historic pace, the supply side is cracking under pressure. And once silver shortages begin, the price suppression that's kept silver artificially low for years will break. And when it does, the rally will be violent.
Well, sure, gold's gone up, but not in a vacuum. Other things have gone up too. And you could say, hey, great, copper's up too. Well, but, iron is up, but those are inputs for your gold miner. So, the best thing we can say is that oil is actually not kept up with the commodities complex this time around, and that has helped. So, there's a couple takeaways here. One is if your gold producer is not seeing better margins, then you got to ask yourself, who put that gold producer in my portfolio? There's something not right with this company. The other thing, though, is like in terms of the big boys, we've seen some of the producers miss guidance or not even guidance, miss analyst forecasts, right? And so they've been punished for not being as good as the analysts' forecasts. But those forecasts were extremely bullish. So you've got companies, and I'm not going to name names, but you know who they are, some of the big boys, they've actually seen huge increases in production and money. They're making more, but they didn't increase quite as much as the analyst expectations. And then the stock price gets trashed. That's crazy. The company is mining more, is making more, and the share price goes down because some, analysts got overly excited or something. That makes no sense. And I do see that as an opportunity. But I would still, as you say, it's a stock picker's market. If the fluctuations put the best of the best, if not on the deep discount rack, but at least, back relatively on sale again, why would I go for anything less than the best?
Silver's supply is running on fumes, and the world isn't ready for what happens next. For years, the mining industry has struggled to keep up with demand, but now we're facing a structural deficit unlike anything the silver market has ever seen. The gap between how much silver the world produces and how much it consumes isn't just widening, it's becoming a chasm that no amount of paper manipulation can hide. Last year alone, the silver market saw a 237 million ounce deficit, the largest in modern history. To put that in perspective, that's more than 4 times the annual silver production of the United States. And this isn't a temporary imbalance. This is the 5th consecutive year of supply deficits with no signs of relief. The industry simply can't mine silver fast enough to meet the surging demand, and existing stockpiles are being drained at an alarming rate. Just look at the inventories. The London Bullion Market Association, LBMA, and COMEX, 2 of the largest silver storage facilities in the world, are seeing their supplies vanish. Registered silver inventories at COMEX have plummeted by more than 70% in just 2 years. The available silver for delivery is shrinking rapidly, and when it finally dries up, prices will have no choice but to explode. But here's the kicker. Silver isn't just a monetary metal. Unlike gold, which sits in vaults as a store of wealth, silver is consumed in industries that we rely on every single day. Solar panels, electric vehicles, medical technologies, 5G infrastructure. Every one of these sectors is devouring silver at a pace that mining simply cannot match. And this industrial demand is only increasing. The world's push for green energy is set to make silver one of the most indispensable metals of the next decade, with global silver consumption expected to skyrocket. But if supply is already struggling to keep up, where is the metal going to come from? That's the question that no one in the mainstream is asking. But once they do, it'll be too late. And if you think supply shortages alone are enough to send silver soaring, consider this. The price has been artificially suppressed for decades. For years, banks and institutional traders have used paper contracts to manipulate the silver market, keeping prices low despite real-world demand. But now, cracks are forming, and once that suppression breaks, silver's true value will be unleashed. That's what we're diving into next, how silver price manipulation is failing, and why the short squeeze that's coming could be bigger than anything we've ever seen.
Of my favorite metals at the time, the copper was still relatively on sale. I have to say right now, uranium is more relatively on sale. I mean, we've had a 40+% correction in uranium over the last year. So, it's easy to see more upside there than it was when it was around 80 when I made that call. That said, I got to face the facts here is that, okay, I said copper was my top pick for 2025 and copper's gone from $4 to 470 or whatever it is where we're recording at the beginning of the year. A nice start, fresh out of the gate, but it's not for the reasons that I thought. Right? The inflationary outlook and the supply and demand crunch on the copper side hasn't really hit. Now you could say, oh, well, Trump talked tariffs for copper. Well, actually he didn't. The executive order is not a copper tariff. It's a study where let's find out, should we do tariffs? And if the people doing the study have any sense at all, the answer should actually be no. It would be crazy to do tariffs. We don't have enough copper in the United States. Yes, there's resolution. There's a few deposits that could be brought online, but there's no way they can make up for all the copper with ramping up production inside the United States. It would take, even if they streamline the permitting, Operation Warp Speed for mining projects, I'd love to see that. Fantastic. I'd be all for it. You might take a 10-year time frame and make it into a 5-year time frame. If you're going to endure high copper prices, and remember, this is Dr. Copper. This isn't just some tiny little oddball metal that goes into a few, atoms here and there. And, this is a major industrial mineral. If you're going to make that more expensive inside the United States for 5 to 10 years, yeah, you might eventually create more production in the United States, but what are you going to do in the meantime? It's hugely inflationary. It's hugely problematic. The rational answer here should be, don't do it, sir. Right? And besides, who's he trying to browbeat with this? I mean, Peru and Chile, these are not public enemy number one. So where I'm going with this is there's been high volatility in the copper space. That's not what my thesis was. My thesis was simply copper was relatively cheaper than the other metals I'm bullish on. The outlook is inflationary, and I expect that to play out by the end of this year. What we have right now could easily go into reverse. Who knows what that study group is going to say? Who knows what the tariffs are going to be? And maybe Mexico and Canada produces a lot of copper for the U.S. Maybe they work out a deal and those tariffs go away. So the near-term tailwind that has benefited copper could easily go into reverse, like in the days or weeks ahead. In which case, I'd be buying with both hands. If we get a sale in copper again before the stuff that I'm expecting to happen comes, I think that'd be a buying opportunity. And by the way, if silver is financially an alloy of copper and gold, right? It has its industrial size like copper and it's a monetary metal like gold. If I'm bullish on both copper and gold this year, I have to be bullish on silver. But if the industrial question goes into reverse on the copper side, that could produce a bigger buying opportunity in silver than gold. So that's something else I'm watching for.
For decades, silver's true value has been buried under layers of manipulation, with big banks and institutional traders using paper contracts to keep prices artificially low. But now, the system is cracking, And when it finally breaks, silver won't just rise, it will detonate. Here's how the scam works. Instead of trading real physical silver, the majority of silver transactions happen in the paper markets, futures contracts, ETFs, and derivatives that claim to represent silver, but are in reality nothing more than IOUs. In fact, for every ounce of physical silver in existence, there are anywhere from 100 to 500 paper claims on it. That means if even a fraction of investors demanded delivery, the entire system would implode overnight. And we've seen glimpses of this before. In 2021, the Reddit-driven silver squeeze nearly exposed the fraud. Retail investors rushed to buy physical silver, draining inventories at dealers worldwide and sending premiums through the roof. The COMEX was forced to scramble, shifting around inventories to avoid a catastrophic failure. And since then, silver withdrawals from major vaults have accelerated, and major institutions have been caught in scandal after scandal. Take JP Morgan Chase, for example, the bank that once controlled the largest silver hoard in the world. In 2020, they were fined nearly $1 billion for manipulating precious metals markets through illegal spoofing. And that's just what they got caught doing. If the largest players in the market have been rigging prices for years, ask yourself, what happens when their control slips? We're already seeing signs that it's happening. The physical silver market is tightening, and the cracks in the paper market are widening. Premiums on real deliverable silver are soaring, while the official spot price remains suspiciously low. Central banks and large investors are accumulating quietly, pulling silver out of the system at a pace that market makers can't replace. And here's the bottom line. When silver breaks free from this suppression, the revaluation will be massive. Some experts believe the true price of silver, once manipulation is removed, could be 5 to 10 times higher than today's artificially low levels. The suppression can't last forever, and when it finally fails, the resulting short squeeze could be the most violent move in silver's history. But here's the real kicker. Silver isn't just facing monetary and investor demand. It's the most critical industrial metal of the modern age. And the industries that need it the most? They aren't slowing down. They're accelerating. That's what we're talking about next. How silver's exploding industrial demand is tightening the market even further and why supply can't keep up with the coming surge.
Yeah, that was really interesting. And it was interesting that the Bloomberg people, of all people, brought it up. And they asked him twice. Like, they didn't just let him weasel out. They said, well, what about this revaluing the gold in Fort Knox? And he shakes his head and he says, that's not what I had in mind. As you say, other things, right? And yeah, but will they? You know, Trump is talking about revaluing, or somebody's talking about revaluing it. And he just repeated, that's not what I had in mind, which is, you know, clearly he doesn't want to contradict the commander in chief, right? He doesn't want to get in trouble with his boss. But it's not something he wants to do. It's not what he has in mind. But so he was kind of caught between the what he thinks is right and not wanting to contradict the consensus in the White House. It's interesting. You mentioned my conversation with Doug. Doug thinks that's going to happen. He thinks that this is going to be part of the solution for the powers that be. If they revalue the gold, then that's a huge plus to the balance sheet of the United States government. And Doug thinks they won't even just market to market. He thinks they'll take it to $25,000 or $30,000 an ounce. Now suddenly we have a big surplus on the balance sheet, right? You know, hey, we're in great shape. We just went from triple C to triple A credit rating. I can see the argument for that, but that is a big ask. That is a tall order. And if you already got people like Besant sort of shaking their head and saying that's not what I have in mind. That would be rocking the boat in a big way. It would be a de facto capitulation, really, of fiat, admitting that gold is worth 25 to 30,000 per fiat unit in the United States. That would be a huge mea culpa and admission of the loss of the value of the dollar. And Trump has, at least rhetorically, he's been talking strong dollar. So I'm not sure Trump would go along with that. So anyway, who knows? I don't think Doug or Rick Rule or you or me, none of us know if this is going to happen. So I'm not going to invest. I'm not going to make my investment decisions based on a revaluation of gold. If it does happen, I think it's nothing but bullish. There's no way that is bad for gold. However they play it, whatever price they do. I mean, even if they go under spot, if you go from 42 to anything north of that, there's no way that's bad for gold. So let's just set that aside. If it doesn't happen, so what? I'm already bullish on gold for other reasons. If it does happen, it wouldn't change how I invested. It just adds a tailwind to what I'm already doing. So I don't need to figure this out, Elijah. I don't know, and I don't need to know what's going to happen. It's just a potential tailwind.
Silver isn't just money, it's a critical industrial metal, and the world can't function without it. Unlike gold, which mostly sits in vaults as a store of wealth, silver is consumed, used up in industries that are only getting bigger. And right now, demand is accelerating at a pace that mining simply cannot match. Let's talk numbers. The solar industry alone is consuming silver at record-breaking levels, with over 140 million ounces used in solar panel production in just the last year. And that number is only climbing. Governments around the world are pouring trillions into green energy initiatives, mandating aggressive solar expansion to meet net zero carbon goals. But here's the problem. Silver is irreplaceable in solar panels. No other metal conducts electricity as efficiently while withstanding extreme environmental conditions. Without silver, the global push for renewable energy comes to a grinding halt, and it doesn't stop there. Electric vehicles, EVs, are another demand juggernaut, using up to 50 grams of silver per car, nearly double the amount needed for traditional gas-powered vehicles. With global EV sales surging past 10 million units a year and expected to skyrocket even further, this demand alone is putting an unprecedented strain on silver supply. Then there's 5G technology. Every 5G antenna, circuit board, and semiconductor relies on silver's unmatched conductivity. The rollout of 5G networks is happening worldwide, with billions being spent to expand coverage. More 5G means more silver, and yet supply is shrinking just as demand is exploding. And we haven't even touched on medical applications, robotics, artificial intelligence, or the growing list of industries that depend on silver. The reality is this: silver isn't just a precious metal, it's the metal of the future. And the industries that need it aren't slowing down, they're accelerating. But here's where it gets dangerous. With supply already at historic lows, industrial buyers are now competing with investors for the same dwindling stockpile. The result? A bidding war that could send silver prices into the stratosphere. And that brings us to the next critical factor, the retail rush. Because while central banks and institutions are hoarding silver quietly, retail investors are waking up. And when they move fast. That's what's coming next. The retail silver FOMO event. Why premiums are surging, and how a mass awakening among investors could trigger the biggest silver short squeeze in history.
That gets on your computer and writes an essay. You don't whack the dog for making spelling mistakes. It's a freaking dog that wrote something. So this is how I see, sorry, Doge dog, It is amazing to me that this has happened. So boy, this is a long preamble. Where I'm going with this is I'm trying not to poo-poo Doge. I am admitting that both Elon and Trump have exceeded my expectations, done more in the real world than I thought they would. But the federal budget is this giant monstrosity. We're not touching the entitlements yet. We're not touching the interest payments alone, right? Over $1 trillion. So I don't think what we're seeing yet. Now, maybe over the course of the year, they can come up with these trillions in savings and it'll make a difference. But right now, it's not really material. The people who are saying it's a drop in the bucket, mathematically, those people are correct. So the inflationary agenda is there. That's real. And the savings that might help that are still hypothetical. So takeaway from this is my outlook is still inflationary. That's very good for monetary metals, gold and silver. It's generally good for commodities writ large, selectively there. But it is good simply on the basis of the inflationary outlook for gold and silver. And then there's also just the chaos factor, the safe haven factor. And that goes back to why I said before, I don't think it's just the central banks buying. I think there's a lot of deep pockets in the US and around the world that are starting to say, you know what? Kind of a crazy world out there. It wouldn't hurt to hedge our portfolios with a little bit of gold. And as our mutual friend Rick Rule likes to say, if we revert to mean of the multi-decade average of 2% allocation to gold, that would quadruple the investment demand for gold. I'm not predicting that. I'm not sure we'll ever go back to that mean. But even if it just goes back to 1%, right? 1% is not a crazy number to say, gee, that, we'll allocate a little bit of insurance in our portfolios. 1% is not a crazy number. That would double the investment demand for gold. So all very bullish to me.
The silver market is already under intense pressure, but when retail investors flood in, it's game over. The last time we saw a retail-driven silver rush, supply vanished almost overnight, premiums skyrocketed, and major dealers were left scrambling to fulfill orders. But that was just a preview. What's coming next could be the most violent supply squeeze in silver's history. Here's what's happening. Across the world, more investors are waking up to silver's insane undervaluation. The mainstream media has ignored it, Wall Street has suppressed it, but the truth is spreading. And retail investors? They're not waiting for permission. Physical silver premiums are flashing a clear signal. While the official spot price remains artificially low, the real cost of getting your hands on actual silver is soaring. We're talking 50%, 60%, sometimes even 100% premiums over the manipulated paper price. That means if the spot price says silver is $25, good luck finding physical silver anywhere near that number. Dealers are constantly running out of inventory and back orders are piling up. And here's the thing, the silver market is tiny compared to other asset classes. Unlike stocks, bonds, or even gold, silver's total market value is minuscule. This means that when retail demand surges, there's simply not enough supply to absorb the pressure. A relatively small influx of new buyers can send prices spiraling upward at a breathtaking speed. We saw this in 2021 when a Reddit-driven silver squeeze caught the financial system off guard. Demand for physical silver exploded overnight, wiping out dealer inventories and sending premiums through the roof. But that attempt was nothing compared to what's happening now. Because today, we're not just dealing with retail buyers. We're seeing central banks, industrial users, and long-term investors all competing for the same vanishing supply. This isn't just another silver rally, it's a perfect storm. The manipulation is cracking, industrial demand is surging, and investors are starting to realize that silver is one of the most undervalued assets on the planet. When the masses finally understand what's happening, the rush to secure physical silver will make previous bull runs look tame. And that brings us to the final piece of the puzzle, the apex. Because when all of these forces collide, we're not just looking at another price jump. We're staring down a full-blown silver supercycle that could send prices into uncharted territory. That's where we're headed next, the final payoff. How high could silver go? And what happens when the world finally realizes the truth?
So, right. So, if the economy turns down, that should be bearish for industrial minerals like copper and anything else. But if the inflation overrides that, and, this is part of the fiscal dominance thesis, Linald, and it might be that the fiscal dominance overwhelms these other pressures. What should be a recession, I think, over the last year or two, hasn't been for this very reason. And commodities prices have rebounded. So there is potential for, if not 70s style, but at least some level of stagflation where you see economic weakness and commodities prices going up anyway. Right? That's what stagflation would do. And then, plan B would be there actually isn't that much recession, whether it's Trump enthusiasm or whether it's deregulation or tax cuts or whatever. If American firms start investing more, hiring more, you could see not stagflation, but a reflationary boom. And that would be even more bullish for commodities. So besides short-term noise, chop in the near term, I'm actually quite bullish on monetary metals and the commodities complex going forward. But I want to be selective. So for example, in the oil patch, we still have voluntary constraint on the part of OPEC plus. So until that goes away, it's hard to be very bullish because, the moment there's more of a bid, then there can be more supply. And it's hard to be very bullish in that context. Let's say nickel, for example, we've got Indonesia and others pumping out, nickel like there's no tomorrow. And lithium, we've got a new technology that, instead of the evaporation technology, we've got the DLE, the direct lithium extraction that's starting to happen. And it's low cost and it's potentially a big new source. Meanwhile, more conventional production, China has, outlined huge reserves and is ramping up production. So If the commodity complex as a whole averages upwards, which I expect, that doesn't mean that the rising tide will necessarily lift all ships. I think you have to be selective. You have to pick your commodities. Look for the ones that have actual supply constraints. Don't bet on them all. Look for the ones with supply constraints.
All the forces we've discussed, rampaging inflation, global instability, central bank hoarding, industrial consumption, and retail demand, are converging into a singular, unstoppable event. This isn't speculation. This isn't hype. This is the reality of a market that has been suppressed for decades, finally breaking free. So the question is, how high can silver go? We've seen silver spike before. In 1980, it hit 50 an ounce during a crisis-driven surge. In 2011, as the financial system teetered, it nearly touched $50 again. But today, the setup is even bigger. Inflation is worse, deficits are deeper, supply is tighter, and demand is exploding across every sector. If silver simply adjusted for inflation from its 1980 peak, it would already be over $150 an ounce. And that's just catching up to where it should be. But what happens when silver's true value is finally recognized? When the manipulation collapses, when industrial users start panic buying, when the world realizes that silver is not just a relic of the past, it's the metal of the future? Some analysts predict $200 silver, others say $500. And in an extreme monetary crisis, where fiat currencies truly crumble, there are those who argue that silver could become priceless. The window of opportunity is closing fast. Right now, silver remains one of the most undervalued assets in the world, but history has proven, once silver starts moving, it moves fast. When the breakout happens, there won't be time to chase it. The institutions, the industrial giants, the central banks, they're already making their moves. The only question is, will you be ready? Because by the time the headlines start screaming about silver's historic rally, it will already be too late. If you want to stay ahead of the financial reset, make sure to subscribe. And remember, this is not financial advice. Always do your own research and consult a professional before making any investment decisions.